Holy buckets, it is a confusing real estate market. There's a lot going on. There's a lot of moving pieces. The Fed just raised the Fed funds rate again just yesterday by another 50 basis points, another half a point higher. Residential mortgages continued to fall at the exact same time. What's going on? How's that having an effect on Portland's real estate market? Well, let's get into the numbers and see if we can make some sense of it. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and as always, I've got the weekly market update, the weekly statistics for the full Portland metro area. That includes all of the bedroom communities plus Southwest Washington, so the whole metro area as a whole. So first thing up is this confusion with the Fed and raising their Fed funds rate. As we've mentioned before on this channel, that the Fed funds rate is not directly tied to residential mortgages. They operate in two different spheres. The Fed funds rate can have an effect on borrowers' ability to qualify for loans. As they raise their rate, interest rates go up on credit cards and auto loans and so on and so forth, which can reduce a borrower's ability to qualify for a loan. But the residential mortgage rates, like the 30-year fixed, is more tied to the 10-year Treasury. Right now, the 10-year Treasury, I just checked, it was a couple minutes ago. Today is Thursday, by the way. And it was trading at like 3.435%. And we know that historically, the 30-year fixed is usually like 1.5, 1.75, 2 points higher than what the 10-year Treasury is trading at. Right now, residential mortgages are falling because that 10-year Treasury is so darn low. I checked Wells Fargo, which is the benchmark that I've been following as interest rates became kind of an important thing, because they tend to be, well, it's for consistency's sake. I'm just checking to see where one company happens to be rather than jumping around to many other companies. But Wells Fargo had their 30-year fixed this morning advertised at 5.875, so it dropped below 6%. Just 2 months ago, the interest rates were over 7%. Here we are at just shy of 6%. When I do the math based on the 10-year Treasury, we're right now about 2.4% higher for the 30-year fixed versus where the 10-year Treasury is. And that's why when we talked about those Morgan Stanley predictions a couple of weeks ago, they said that difference, a spread between the 30-year fixed and where the 10-year Treasury is really high. And it's high because there's volatility and there's confusion in the market, and people don't know what's going to happen. So that number tends to be a little bit larger in times of distress. And they feel like that there's room for that number to come down as we go into the next year, into 2023. So that's probably why residential mortgages are going down, as the Fed funds rate is going up. Who knows? We'll just watch these numbers and see how they play out. But let's get into the Portland numbers, because there were a couple of interesting things here. So let's talk about the average sale price, because something kind of interesting happened here. If you remember last week, the average sale price for that week compared to the same time period last year was down about 3.8%. So homes were selling on average 3.8% lower than what they were selling for in 2021 for that same week. But remember, I said lots of caveats with that. There's a lot of volatility. We're dealing with a small sample of numbers, and you can have a bunch of high-end sales close all at once, or some high-end sales that you typically see not close, and it can cause that number to sway kind of dramatically from high to low. Well, that's what happened. That's what happened this week. The average sale price jumped 4.5% this week to $605,702, which is up 7% compared to where it was at roughly the same time period last year. The median, though, which, as we mentioned last week, is supposed to take some of the volatility out of those numbers, continued to fall. So the median sale price went from $520 down to $506.5, which is a 2.5% decrease in the median. And when we compare that number to roughly the same time period last year, that's a decrease of 0.7% in the median sale price. So that's more, I think, of an indicator, and this is where we've been seeing the trends working down, more of an indicator of where the market's going, what's happening with the real estate market. So the inventory did continue to fall. It was down another 4.5% to 4530 when we compare the inventory the number of available listings for buyers to choose from this year to last year. That's a 103% increase in the number of homes available for buyers to purchase. So we're more than double the number of active listings that we have this year to last year. Keep in mind though, this number is still a historically low number. I have not run the 15-year charts that I usually do at this time once the market action comes out, but I will be doing that. But I suspect that we're probably, if not the third, then the fourth lowest inventory in of available listings for buyers to purchase over the last 15 years. That is only probably 21 and 22 have had fewer listings for buyers to choose from than we have right now. So a little bit of context there. Number of new listings was low. It was down 12% at 314 new listings hitting the market. And the number of price reductions was also way down, 31% fewer price reductions this week than the previous week at 376. Demand seemed to surge a little bit with the number of new pending deals. So the number of deals that went under contract, but keep in mind that last week that number was a little bit low. So this might be a little bit of a rubber band effect when we had kind of a low a number that was lower than we typically see. This might be a little bit of a snapback with a higher number this week. 476, up 31% versus the previous week. Number of homes sold was up slightly, but it's still a pretty low number at 369. That's only a 3% increase from the previous week. The average days on market did increase 8% to 39 days on market. So on average, a home spent 39 days on the market before they received an acceptable offer. Last year at this time, that number was 26. The median came up 2 versus last week, from 20 to 22. That number last year at this time was around 10. So how did the homes do that did sell? On average, sellers had to discount off their original asking price about 4% off in order to get a sale secured on their property. The number of canceled and expired listings were down 31% for canceled, 72% for expireds, but keep in mind that that expired number is compared to the previous week's expireds, and the previous week was one of those weeks where we crossed from November into December, and a lot of listing agreements are set to expire at the end of the month. So not a surprise there that we have such a big drop in the number of expired listings. Bank owns and foreclosures, bank owns and short sales, so foreclosed homes and pre-foreclosure homes are still really low. We did see an increase in the bank owns by one home, so it went from 32 to 33 homes on the market that were bank owned, and the pre-foreclosures, the short sales, dropped by one. It went from 16 to 15. So we're looking at a total of 48 distressed properties on the market that's active pending and short sale pending versus almost 7,000 active and pending listings. Still a really tiny percent. We're seeing for the first time it just kind of inches up a little bit, but we'll keep an eye on that number and see if anything changes or if it starts to increase significantly. And the last thing I have for you today are just the monthly market statistics. You probably saw an article or two or maybe something in Oregon Live talking about the market statistics. Well, these are the market statistics that come out every month from RMLS. And if you're unfamiliar, RMLS is the realtor marketplace. It's the source of information that all of the internet searches that you're using to find properties in Portland, it draws from that. And it doesn't matter if it's RE/MAX or Redfin or Zillow, wherever it happens to be. It's the realtor marketplace where all this information comes from. So RMLS, each month they put out their market, they call it their market action, summarizing what happened the previous month. So we have the November statistics in full. The inventory in months came in at 2.6 months of inventory. And what this number is a measure of buyer demand and supply and demand. So buyer demand and supply of active listings. At the current rate of sales, how long would it take to sell every active listing on the market given no new listings? So how long would it take to sell the inventory, the supply of active listings at the current rate of sales? 2.6 months in this case at the end of November. Historically, 6 months has been sort of our balanced market benchmark. So anything 6 months or above would be considered a buyer's advantage market, and 6 months or below or below 6 months would be considered a seller's advantage market, although a lot of analysts have kind of changed their tune about that and said, no, that number is probably in our current markets or our more recent markets is probably around 4 months of inventory. Regardless, we're still below both of those benchmarks. This looks like on paper it should be a seller's advantage market, but out there on the streets, it doesn't feel like that. It feels more like a buyer's advantage market or more of a balanced market. So I suspect we'll just watch, and it's just one of the confusing things about this market. I suspect what's going to happen, we're just going to see this inventory months creep up until we get to more of a realistic number. I don't feel like this number accurately reflects what we're experiencing out there on the market. The rest of the numbers that we have here just kind of repeat the same refrain we've had since about April, which is this is a market of fewer sales. We have pending sales down 43% comparing this November to last year's November. Closings down 42%. The inventory, so the supply of active listings is up 94%. So we have far more listings available for buyers to choose. And then the days on market is up 63%. Average sale price $613,300, and this number here that they have for the appreciation of 7.4% is the year to date. Keep in mind that when we're dealing with normal markets, usually this is the number we look at, the year to date or the 12-month rolling average. How did the 12 most recent months compared to the previous 12 months? We average those out and compare the two numbers. So this is the first 11 months of 2021 compared to the first 11 months of 2022. Keep in mind that in this figure are some really good months, January, February, March, and into April. Those were good markets, really strong seller's advantage markets. Probably the strongest seller's advantage market that I've ever experienced. That was at the start of this year, really low supply, really high demand. And that's taken into consideration in the 2022 numbers. As markets start to turn or change, we start to pay more attention to the month-to-month comparison or the week-to-week comparison. We just went over what those weekly numbers are. And if we compared November of 2021, just the month of November, to the month of November of 2022, we only saw an increase in the average sale price of 1.6%. So that 7.4% that we see as the year to date is more of a backward looking figure, and it takes into account a market that is very unlike the market that we have right now. So that's what I've got for you this week. As always, all real estate is local, so if you're curious about what's going on in your neck of the woods, feel free to reach out to me however you like to communicate, and I'm happy to share what I know and what I think. Thank you very much for watching this video to the very end. If you like the content, please give me a thumbs up. And if you haven't already subscribed, feel free to subscribe. I would love that. And if you know someone who might enjoy this video or find this information helpful, please send this along to them, and we will see you next week.